It's all about earnings on this Tuesday. We're seeing the latest results weigh on the NASDAQ, but we're seeing the Dow still up by 100 points. Earlier, we saw the S&P 500 hit a new intraday high. So joining me now is Alan Valdes of SilverBear Capital. Alan, great to have you here today.
Thanks for having me, Remy.
Well, so far this morning, it's been all about earnings. Dow, as well as we saw Capitulate raise the Dow. And in addition to that, we saw Google weigh on the NASDAQ. So given everything we're seeing so far, what do you make of this earnings season?
Well, right now, I'd say the earnings have been good. Yeah, Google was, it still beat, but it was down. You know, investors are a little worried going further. But, you know, we're up triple digits today. We're at new high in the S&P. Yesterday, new high in the NASDAQ. Dow kind of let us down. But I'll tell you, we're having a good earnings season so far. We have about 180 companies reporting this week. So a lot of investors, why it's so slow, volume so light, they're sitting it out, waiting to see how these things play out. Although, you know, once we get to Facebook, we get Boeing, we got a slew of major earnings. So we'll see how it turns out. But today, it's good to see like McDonald's and Industrial Corp, Caterpillar beat. So those are the bellwethers that we'd like to see, not just the techs. We'd like to see these industrials, and they hit it out of the ballpark. So I think we're going to have a good quarter.
And we are in the middle of summer, but today also marks the beginning of the two-day Fed meeting. Nobody expects any change in terms of monetary policy, but at the same time, everybody is waiting to see when they'll begin paring back their balance sheet. And on top of that, all the political turmoil in Washington, D.C. will continue to be monitored, including today's vote on health care. But how are you factoring all of the developments in Washington, D.C., including the Fed, into your overall strategy?
Well, you know, health care, I think most traders down here, and even infrastructure spending, it's not going to happen in 2018. Taxes may happen early 2018, but we're seeing spring, the earliest with the health care, with the infrastructure spending, regulation. Those things are going to take a while. As far as the Fed goes, that's the one thing that worries traders. Every time they try to unwind those $4.8 trillion position, the market shakes, the market capitulates. They're going to have to be very careful. I mean, we're at all-time highs, but it's a fragile high when you talk to people. They're all saying, oh, I'm a little nervous, whatever. So, yeah, we're at an all-time high, but it's not like people are going out and cheering and buying Ferraris. So we have to see, and if they start to unwind, if they make one mistake, you'll see the market come in.
It's interesting you mentioned that, especially at current lofty valuations, but we continue to see some mixed economic data. We got consumer confidence, which was close to a new record high, but at the end of this week, we'll get those GDP figures out from the U.S., so we'll watch those figures. But before I let you go, we're seeing oil up today, both WTI and Brent up over 2%, but where do you see oil going?
Well, you know, it was a good meeting for energy. That's what Saudi Arabia said they're definitely going to cut back. Nigeria said they're going to cap their output. I just don't see oil anytime soon getting back to 100. It's just under pressure from the American frackers. We're more energy efficient with our engines, and I think oil's going to stay in this range, the $40 to $50 range. Remember, drive time is now, and we're coming to the end of summer, believe it or not. What's it, August next week? It's crazy. So, I mean, it is hard to believe. So I think overall, it's going to stay in this range, and that's it. It's just that we're not using the oil like we used to do. I mean, you see buses out here with natural gas, and it's just a different world out there now.
Okay, Alan, well, as always, great to have you here, and thanks for your insight as always.
Thanks, Remy.